Alright, for this video I want to go through a sample form W-7, which is an application for an IRS individual taxpayer ID number, or ITIN for short. Now the ITINs are filed and assigned to individuals that are not U.S. citizens or permanent residents, and generally these are filed with a tax return at the same time. So you have to file the 1040NR with the W-7. But in some cases, you can file it before having to submit a return, and that's what we're going to look at in this example. So we are going to be filing under the partnership income exception. So let me run through what we have here in front of us, and then we'll come back to everything in more detail. We've got the W-7, obviously, which is a one-page form. We've got a cover letter that is being submitted by our non-resident here. We've also got a partnership withholding certification from the entity he's invested in. We've got a copy of the IRS EIN CP575 notice for the partnership, a copy of the partnership agreement as well, and then lastly the members schedule that shows this non-resident's investment in the entity. Then we've also got the Form W-7 instructions here, so we'll reference this. And then lastly, just one slide here covering some background on this ITIN application and then these partnership income exceptions. So the ITINs can be applied for a variety of different ways. So you can use acceptance agents or certifying acceptance agents. They are very good resources because they can help expedite the process. You can also file in person if you go to a taxpayer assistance center, or you can submit it via mail. And that's what we're going to look at in this example. Our non-resident is going to be filling everything out and mailing it to the office in Austin. Now, Form W-7, like I said, are generally submitted with a completed U.S. tax return. So you complete the W-7, you complete the 1040NR or the 1040, whichever it is you need, and then you file it with the IRS at the same time. Now, under some circumstances, there are exceptions, and we're going to look at one today. An individual can apply for an ITIN without needing that tax return. And so in the IRS form instructions, if you scroll down to the exception tables, there are a variety of exceptions for reasons why you need to submit the W-7 without the return at that time. And that's what we're going to look at here. The very first one, exception 1A, which is for individuals who are partners in a U.S. or foreign partnership that's invested in the U.S. and has assets that are going to generate income subject to IRS information reporting and federal tax withholding requirements. All right, so that's what we're looking at here. So the exception 1A, what is it? So partnership income. If you are a non-resident and you're an equity partner, and this is either a U.S. or a foreign partnership, and that entity is going to be generating ECI, so effectively connected income with a U.S. trade or business, the allocation of ECI to you as a non-resident is subject to withholding taxes. So the partnerships have to file the Form 1065 and the K-1s. They do this for each partner, the K-1. But non-residents are also going to have to get a Form 8805. 8805 is where the partnership reports the allocation of taxable ECI to that non-resident and the amount of withholding tax that was applied on that allocation, and that tax is sent to the IRS. Now, here's where the ITIN is really important. The 8805 can technically be filed without an ITIN, so they can submit the withholding on your behalf, but the problem is when you as a non-resident go to file that tax return at a later date and you want to claim the withholding on these 8805s, very often you get a lot of pushback because the IRS cannot trace the withholding to you personally because there is no tax ID number attached to the 8805. So this is why we have this exception available to apply in advance. We want to get that ITIN before the end of the year. So when the partnership files the 1065, the K-1s, and the 8805, they can submit the withholding tax and the 8805 with an ITIN for us. So in our fact pattern here, we have Adam non-resident. He's a citizen and full-time resident of Cayman. And Adam has no plans to move to the U.S. He just has a tourist visa, but he wants to invest in a company there. So Adam and three other business partners, they opened a Wyoming LLC in March 2024. Adam put in $20,000 for a 20% ownership interest in the LLC. The remaining business partners all are U.S. persons and live and work in the U.S. So Adam is just a passive investor in Cayman. Now the company is operating a restaurant in Orlando, right? So we have this U.S. trader business and we have effectively connected income. Now because Adam is a non-resident, his allocation of that effectively connected taxable income, ECTI, is going to be subject to withholding tax. And so the partnership is going to give Adam an 8805, and the partnership also has to separately file the 8804, which is like the summary page. Now, in order to properly report these taxes, the partnership needs Adam to get an ITIN, right? The sooner the better. So Adam goes ahead and he prepares this application in May 2024 and sends it off to the IRS. So that's what we're going to be looking at here is what does Adam need to include? So the minimum documentation here, and we'll see we put a little more in just to cover our bases here, but the documentation you have to submit in order to claim Exception 1 is a copy of the portion of the partnership or LLC agreement displaying the EIN and showing that you're a partner in the partnership that's conducting business in the United States. All right, so let's look at his W-7. So the W-7, we are marking the top box here, applying for a new IN. So we're not a new ITIN, rather, we're not renewing one. And the reason why we're submitting the Form W-7 is this last checkbox H, and we are entering Exception 1A, partnership income. Now, the rest of this is pretty straightforward, right? Adam's name, his mailing address in Cayman, his foreign address is the same, also listed in Cayman. His date of birth information, so March 9th, 1983, Cayman Islands, and he is male. Countries of citizenship, he's a Cayman citizen. Cayman doesn't have any tax ID numbers because they're tax exempt. And the type of visa that he does currently have is just a B1, B2, and that expires in 2028. Now the information submitted, the identification information, he's submitting a certified copy of his passport, and that's a Cayman passport. And line 6E, he has never been issued an ITIN before. So 6F we can leave blank, and 6G doesn't apply because he's not applying in connection with being part of a college, university, or a company, right? Length of stay, right? He's not coming to the U.S. to work. He just needs this ITIN. He's going to stay in Cayman and just be an investor. All right. Now, there's a lot of different rules on what kind of documentation you need to submit. You can send them your passport and they'll send it back to you, or you can get a certified copy done by a U.S. consulate or embassy. That's what he did here. So you make an appointment with the embassy or a consulate. They can review your documents, make copies, and they stamp it for you. You can't just use a regular notary, unfortunately. Now, the first piece that we have, actually, sorry, let me go back up to the cover page. So Adam submitted this cover page that's just going to lay out everything that he's including, so he makes it easy for the IRS to follow. So he's got, please find and close my completed W-7. I am applying to comply with federal tax withholding and information reporting obligations for the 2024 tax year. I'm a partner in a Wyoming LLC, which expects to generate gross, effectively connected income with a U.S. trader business. For the partnership to comply with these federal tax withholding and reporting obligations for non-resident partners, the partnerships requested I obtain and provide a valid ITIN. So please find and close the following. So we've got the completed W-7, we've got the copy of the Cayman Islands passport certified by the embassy. He's also including a certification letter from the managing member of Partnership LLC. They're also including a copy of the CP 575 notice. This CP 575 is the EIN confirmation. And then he's also including a copy of the partnership agreement, which is going to show that he's got a 20% equity ownership in the entity. All right. So we've gone through the W-7. We've covered the passport pages. So let's look at the withholding certificate. So notice that this wasn't required, but I recommend doing this just to make it clear that yeah, this is a partnership, and they need it for these 8805s and 8804 reporting obligations. So it should be on company letterhead, ideally. So we've got it addressed to the IRS, to whom it may concern. This is to certify that Adam non-resident, the applicant, is a partner in Partnership Name LLC, which is a U.S. partnership that's going to generate income in the current year that is subject to IRS information reporting requirements and withholding of federal tax. Partnership is engaged in a U.S. trade or business and will generate gross effectively connected income. As such, the partnership must withhold federal income taxes on the ECTI allocated to non-resident partners. Partnership will file Forms 8804 and 8805 to report the applicant's allocable share of the partnership ECTI and the requisite withholding taxes. The applicant requests an ITIN to comply with our reporting, withholding, and distribution procedures. And so the managing member of this LLC is William, so we went ahead and signed that. Then the next attachment is the EIN confirmation. So partnership name, William applied for this using his social, so he's listed as a member. And we can see the EIN that's assigned, and that's, again, a CP575 notice. And the partnership, the entity selected that as a partnership, so they've confirmed down here that a Form 1065 filing is going to be needed before March 15th of next year. All right. Then the next exhibit is the partnership agreement. So you can pull out the pages that show the ownership if you want, or just include the whole thing, right? So he's just included the whole thing. So we have this LLC operating agreement, partnership name, LLC. So this just is confirming again that this is an entity set up in Wyoming. The company is, so Article 1.2, right, upon admission, the company shall be treated as a partnership for U.S. federal tax purposes. So everything looks here. It's just a standard operating agreement. So you can include the whole thing or just pull out the pages that you think are relevant, but Adam's just attached the entire document. And so at the end here, we can see that these are all the members that are in there. So Adam here is listed as a member. He's signed it. And then the Exhibit A to the partnership agreement also shows that, okay, there's 4 partners. There's Adam listed as a 20% owner, and that was his initial contribution just to get the thing up and running. All right, so that covers it for this tutorial. I mean, I hope that was pretty straightforward. Again, be careful to make sure that you are including everything that is required with the form generally. And then if you are applying for an exception, make sure you're attaching everything that the IRS needs to see. Otherwise, they'll send you a letter saying, hey, we're missing stuff. So, all right, that covers it. Thanks for watching. As always, I appreciate it and look forward to seeing you in the next one. Thank you.